everyone. Thank you for joining us, viewing from home, the office, or from the home office, and welcome to all the panelists here around the table. Today, we're going to dive into a world where insurtech and climate tech and analytics meet. As we know, the insurance ecosystem is a very complex one, and within Earth observation and analytics, there are a lot of stakeholders as well. So with only 4 people in the room, there will be things that we'll be wanting to double click on in future episodes, but we certainly have the experts in-house to help us take a leap in understanding the state of the art when it comes to creating and applying data about climate risks, national catastrophes, and extreme weather to insurance use cases. So let's start off with a round of introductions. Let's take a minute each to introduce yourself and your relations to the topic at hand. So Jakub, for me, you're in the top left. So I'll pass the floor to you.
Rose, and well, it's great to be here. My name is Jakub, and I'm a co-founder and the CEO of Orbify. Orbify is a platform that enables transforming geospatial data, including satellite imagery, into fully functional, fully fledged web applications for the end users, decision makers, non-technical, non-expert people who want to better understand the environment around them. And in order to do so, we give our users, our builders, access to data coming from multiple different sources, and then we provide them with components, algorithms that process the data, that derive insights of satellite imagery and other types of geospatial data. And then we make it super easy for them to visualize this data through interactive dashboards, web applications, things that can be accessed by non-technical, non-expert stakeholders, things that enable them to make better decisions down on Earth. So I could summarize it in a way that we are working on making space useful for taking better decisions down on Earth.
Got it. Thank you. So, Delin, can I pass the word on to you?
Sure. Happy to be here. My name is Delin Shen. I'm the Director of Innovation and Research at Cincinnati Insurance Company. We are a traditional insurance company, and we started kind of late in the game. For me, it's a lot of learning to start leveraging geospatial imagery and environmental data in our process. There are a lot of data in different formats and new technology leveraging those. It's a good journey for us. I'm very excited to hear our peers and how the new technology can help insurance companies.
Yeah, great. So I expect I'll be asking, or I'll be throwing some questions your way, which have to do with, have you already implemented this? And perhaps questions around the why not. It's good to have you. Thank you. Nicole, can I pass the word on to you?
Of course. Thank you, Rose. And thank you for having me. Hi, everyone. I'm Nicole Engels. I'm CEO and co-founder of 8020. We leverage machine learning and geospatial analytics, so a lot of geospatial data, to build long-term climate forecasts. So specifically CAT models. So we have forecasted for all of the United States already for perils like wildfire, flood, severe convective storm, tornado, hail within that, drought. And we've been working with insurance companies to help them underwrite and mitigate climate risk. So very excited to be here. Nice to meet you all.
Great. Thank you. Mario, that leaves you.
Last but not least, thank you all for having me here today. My name is Mario Spadina. I am CEO and co-founder of SeaCras, a small Croatian startup that specializes in coastal waters monitoring by high-resolution satellites. So right on spot Earth observation, of course, but in fact, I'm a specialist in statistical thermodynamics. So in former life, I did chemistry and physics mostly. But now for a couple of years or years now, I am in Earth observation. And what is the core of business that we do is, in fact, classification of phenomena at the sea surface and at the seabed. So in this way, we can connect it to pixels. Okay, and this is where Earth observation comes in hand. Environmental science connected, so we can create value-added services fueled by Earth observation. Why? Because it's quite cheap and quite large scale. So I hope I will give some nice insight from our domain.
Thank you. So it sounds like Nicole and Mario are very specifically focusing on the insurance business, also with their own applications. And for you, Jakub, it's more of a general platform that you can choose to deploy in various different use cases. Would that be correct?
That's correct. Although we are actually focusing heavily recently on reforestation efforts and preventing deforestation. So one of the things that we are working on is providing our users, builders with components that are great at tracking this, right? So forest area, forest canopy height, forest crown cover, the amount of biomass that is located in the forest.
Gotcha. All right.
And so we're very focused in insurance as well, but we have a bit of a wider vision also. So we've been working with real estate investors and creditors to leverage our data to better plan and mitigate for risk. Obviously, insurance is the industry that probably needs our data the most right now. But as you know, the world starts to become a bit smarter on what's happening in the world and with regards to climate change and how they should be, you know, considering that and how that impacts their business, it's starting to become important for other industries as well.
Yeah, I understand. And I think it's also relevant to perhaps see how the different industries that you're also considering a part of your market or your portfolio do or don't pick up technologies that insurance may. So it's good to make that comparison too. But let me take now a minute to sort of set the stage for the first question that I want to pass around the room. And this is just to sort of underline the relevance of our topic today, because integrating good, up-to-date spatial data into the actuary tables that really power the industry is absolutely fundamental for making both the industry as well as all the people it serves thrive. Because, you know, insurance gap aside, homes, infrastructure, agricultural land, and all other physical business assets that are out there basically have two things in common. One, they are insured. And two, they are at risk of natural disaster and extreme weather. So all this risk is currently being managed by stakeholders in insurance. And so in my view, and potentially also in yours, they need all the data and all the help they can get to make this system stay upright and affordable for everyone that relies on it. So within this changing world, what are really key climate and location related risks that companies within the insurance business are interested in or should be interested in to identify and map using EO data? I'd like to pass the word first to Delin to sort of see what your baseline currently is when it comes to this topic.
Yeah, sure. I guess we are a typical P&C insurance company. Our business are roughly 2/3 in commercial line, 1/3 in personal line. Those property and casualty insurance are, when you think about traditional area, is really auto, property, general liability, workers' comp, those kind of things. So we are more focused on a subset of the climate risks. I think, Nico, you mentioned a few of those already, right? Wildfire, hurricanes, hail, tornado, winter storm, flood. And we also are very interested in buildings and the surrounding environment. We call that geospatial imagery, mainly because you take the photo from the air, either satellite or airplanes or high-altitude balloons, and then you can understand the condition of the building and the environment, right? Whether it's there are many buildings around or it's a standalone, what's the condition of the parking lot, those kind of things can all tell you information about the risk of the business. So those are our major focus at the moment. I understand that, I guess, from my prior job at AIG, there are also a very, very different set of insurance companies, I guess, insurance business. For example, you look at, I think, Nick, you mentioned drought as well, right? If you insure farm, that's kind of different kind of industry. Or you freight, right? Those large tanks, you care a lot about the weather in the ocean, those kind of things. Just from my personal experience, we haven't really touched much upon those. So my experience, my exposure was limited to those traditional P&C area.
And just to ask one follow-up question, you say traditional P&C area. Is this also already old news? integrating all of this data successfully into production processes?
I would say old and new, because such data has been leveraged by insurance company from a long time ago. Just data, number one, the data is newer today with a lot more data points and higher accuracy. Number two, the technology is better. The data is available in much faster speed. And the computation power we have today can build much better models. So yeah, it's old and new.
Got it. Okay, that's great. Thank you. So Nicole, your name was already mentioned a few times. Would you like to add anything to the relatively extensive list that was already mentioned? Is there anything more, anything new, anything that you find of more interest than another within that list in your experience?
I think, just to add what Delin said, I think, it's very true that the use of this data is old and new. I think that a lot of insurers are a bit disheartened with the accuracy and the granularity of the data that they've been using to date. And the reason for that is because a lot of the models that have been built until now use the past to inform the future, right? And we are obviously not, in agreement with that type of philosophy because of climate change specifically. So there's a lot of innovation that is happening where that helps us to build these long-term climate forecasts in a very accurate way. And specifically with 80/20, we are trying to understand not only how meteorological variables might work with urban variables to create these kind of catastrophe forecasts. We also leverage the use of nature variables. So, for example, when we're forecasting for wildfire, we see that there's a big correlation between the presence of bark beetles and wildfire risk, because bark beetles eat into the wood, they dry up the trees, and they turn them into fuel for wildfire. So taking a very kind of holistic and creative approach to climate forecasting has been really helpful for us and has really helped us to drive our forecasting accuracy. But just in terms of also, the importance of perils, I think over the past, 3-5 years, maybe wildfire and flood have become like, the perils to look out for in the United States for property and casualty insurers. But I think that more and more, and specifically with what's been happening in the past year and months, severe convective storm has been quite a big new focus for insurers. And it's actually the peril that we sell the most. In form of physical risk scores and raster files. And a lot of insurers use like the severe convective storm kind of peril as an umbrella that include hail and tornado. But we are able to separate those perils as well, so that insurers are able to understand, where does the risk overlap and where it doesn't, and therefore how can they help their customers mitigate the risk like at home level. So I think it's been really interesting how the industry is evolving, and I think that as insurers get more sophisticated and they are able to ingest data that is not only state level or county level but like address level, I think that it's going to be really helpful for the industry to stay well.
And so I'd like to ask you a follow-up question and then probably also pass it on to Mario. Because you mentioned insurance may have been like disappointed with the old data that wasn't granular enough, that wasn't good enough, that doesn't provide sufficient value to truly make a difference. Delin already mentioned like there are changes happening that gives it a boost, like improved sensors, like improved computing power. What would you point at the secret sauce of either that's happening in the industry of your own company that is making the change between how we used to do this and how we're now actually able to, predict rather than just rehash whatever happened in the past? Like what would you point at that is different now for you or for the industry to take that leap from old to new and from bad to better?
Well, I think it's the big variable is carbon emissions. Because that's what really is creating climate change, and we leverage the CESM carbon emission forecast in our models as well as others, and we our approach is to basically forecast for the worst, and what's happening is is very much what we're forecasting. We forecasted for both Hurricane Ian and Hurricane Nicole this year. We got that right. And it's like these things are not linear. They change every year. It's different, and we're able to capture that through the strength. Well, through the kind of perfect recipe that we have, that obviously includes carbon emissions in our forecasts, but also the strength of the technology that we're using, which is a deep learning neural network that allows us to create these really strong correlations, understand really why these things correlate, why they're statistically significant, and create a narrative about what's happening in the future. And I think that's important for insurers, because you need to start thinking about not only how to underwrite a lot smarter, but also how to diversify your portfolio in the context of climate change, because climate change is causing risk to move. We, for example, are forecasting that in the next 10 years, 80% of tornado activity will be happening in the southeast of the country. And that's really important because it creates spaces for opportunity, but also spaces for increased risk. And insurers, that we're working with, are really starting to think about how to diversify my portfolio and how to not kind of have to pull out completely of certain states, like is happening in the cases of Florida, California, Colorado, etc.
Diversification is interesting because then you can also start looking at like reinsurers and brokers and how they sort of choose to distribute the risk between them, which I think is incredibly interesting, because that really sort of makes you go down the rabbit hole of how risk gets sold basically within its own ecosystem. Perhaps a little bit more on that. First, Mario, what would your take be on what has changed that is making a significant difference in data quality that is on offer these days in the market?
First of all, I would say the big, boost comes from, in fact, a very trivial thing are the archive data. Okay, so basically, in order to have good models, you need good data sets, and with every new satellite provider that exists, new data sets arrive, and in fact, we can use them to make environmental benchmarking, what I call it, to establish the trend. This is something that we will talk, I hope, more on this meeting. But in fact, long-term benefit is more beneficial one, in my humble opinion. Why? Because in order to see the change and to mitigate and prevent, if possible, we need to establish the trends. And trends are not established through 1 day, 2 days, and so on. They're established through years. And this is what Earth observation with archive Earth observation data, in fact, gives. We can go retrospectively in an iterative process, if you wish to call it, and see what was the benchmark then and what is the benchmark now. And then we can make some forecasting in terms of extrapolation or whatever the method that you use. So Nicole explained it very well. I will just put it in a vertical to the blue economy. We are living on a small blue planet, but in fact, it's a big blue planet from perspective of mankind. So, and still there, forecasting is quite in humble, I would say, manners. Why? Because it's difficult to monitor seas. Now, there are a few problems arising. It is expensive. And I would say risk insurance did not really pick up the slack yet, at least not in Europe, not that much. And I hope that will change, by the way, but now because of the new regulations and directives are pointing to the way that we can exploit Earth observation in 2024 already. But we have to be realistic a little bit. It is still a young industry, People, I would say, see Earth observation still as a science fiction, many of them, In certain domains, such as land monitoring, it already exists a long time. So it's on high level, but connected to the seas monitoring, that's still new. So, we are struggling there. We all are, but the industry is gaining, it's gaining on leverage. So we hope it will continue in the future. But it's not that all is pessimistic. There are a few very good examples which I will point out here. For example, monitoring shoreline changes, for example, natural or man-made, like cliffs erosions, or even sea level changes, problems like what Venice has, are now coming for a benchmark in Earth observation. Jakub, I think you can clearly give your perspective on that. But I mean, these are practices that are literally exploiting this data in a benchmark way. Also, question of mangrove or coral reefs zonation mapping, also entirely boosted or powered by Earth observation data. So it's gaining on leverage, and this is what makes me, in fact, optimistic. And also, I would like to point out one good example as well, basically to add on Delin's case of agriculture. Soil, for example, if you want to get geographical indication, which is not really connected to the risk, but it's a part of the value chain, you need, for example, to identify is the location or micro location specific. Okay, and this is where climate change really makes a problem, because it's hard to sometimes establish what was and what wasn't. And Earth observation with, again, archive data really helps that. And for example, Professor Lopez Baeza did extraordinary thing in Valencia region for winemakers there, where they can see the soil moisture differences in trends through years happening exactly by use of optical data from satellites. So this is I would say, few very positive and beautiful examples of technology.
I think I liked your answer on like it can actually be very simple. Like the thing that changed that actually makes you better able to predict the future is basically just having more archive, having more of the data that we've spent so long collecting. And I also know it's something that a lot of enthusiasts are very excited about. It's just a matter of time before we can hop into a time machine and have great information about our past, just to hang in there long enough. But hey, Jakub, I'd like to pass it on to you and ask you which technologies or which projects that you've been able to run outside of the insurance industry would you most want the insurance industry to have? Like, could you project something that you find is rather successful, and explain a little bit around how you feel it can also make a change for better risk management when looking at climate risks?
Well, in general, when we are thinking about InsurTech, I think it's useful to introduce some sort of taxonomy, right, to help us think about all of the problems that were mentioned earlier on. So, first of all, when we are talking about remote sensing and insurance, InsurTech, then usually we are thinking about objects that size can be measured in meters, right, not mobile phones insurance, because they are hardly visible from space. So, this is the first thing that helps us to set our thinking. And then there are three types of applications that we discussed that were already discussed by people speaking before me. So we can think about underwriting, right? So deciding, okay, this property is worth that much. We can see it from space. So this is something you can insure. Then there is damage verification. Like there was property, there is no property. So change detection. And then insurance dynamic pricing. And this is something that Nicole, I think, touched base upon, right? So enabling us to detect that risk of wildfires is much bigger this year. And since the house is located relatively close to the forest, then the insurance price should be higher. So underwriting, damage verification, and dynamic pricing. So these are the applications. And then when we are thinking about applications of Earth observation to those three domains, then I think that the biggest thing, that the most important thing that everyone is talking right now recently is more of artificial intelligence. And this is something that I'm sure Nicole can tell us much more. But I think that in general, when we are talking about Earth observation, times of analysts that are looking through magnifying glass into a picture are almost gone. And we will be relying more and more on different models that have been trained to actually derive insights out of satellite imagery, out of other types of geospatial data. And I think that this is the trend that will be gaining at popularity.
Delin, is that true? Is it indeed the case that an AI is already now taking over the analysis of most spatial data?
It definitely is the trend. We do see a lot of new companies coming to the market and say, hey, we have AI, we have machine learning, we can help you run analysis and report, automate the process. right now is, I guess, is the early stage in the industry. There are so many solutions. Some work better than others. It's hard to say still which solution will be the best for insurance companies. There are a few really strong candidates, but I think in the next few years, things will get clear. Some of those will be acquired, merged. We'll probably see some really good solutions coming out of it. We do still have some manual process, but everyone knows the AI can do things much faster and efficiently. So once the AI-based tools are mature, we probably will shift to a more automated process, and human intervention will be less and less. The overall process will be more efficient.
So you say it's been the trend that it grows more and more. That's a given. But today, would you say that whenever an underwriter or a claims agent looks at a case that concerns relevant spatial data, are they looking at it with their own two eyes, or has an AI done it?
We have a mixture. We are not on the front line. So there are some insurance companies, they do crazy things, right? We're not like that. We define ourselves as a fast follower in the innovation space. We look at technology that are proven and use that to help our underwriters. At the moment, we're piloting several technologies. So some of our underwriters are still using the old ways. We got an address, we go to the mapping tools, type in the address, and look around, zoom around, use the mouse. We also have a program in place. When we have calls coming in, the program automatically download the images, run our computer vision models, and generate a report and score. If the score passes threshold, it will trigger a referral, send it to underwriter to look at it. If it does nothing raising red flag, it will go through quick, we call that straight through quoting, right? Get a price, close deal quickly. Things can be done 10, 100 times faster. So it's kind of mixed bag right now.
Okay. And looking at the future, you expect that mixed bag to just slowly but surely shift more towards the reliance on AI. And you have your eye on some market players already that you feel are going to be winners, or have there been areas at which you've been just only disappointed so far, like things that you just haven't found a good solution for yet?
Definitely some good partners in the market. We have a few have very good experience with. I just cannot advertise for them since they didn't pay me for that. Mm-hmm. We do think in the future there will be more automation in place, but I believe, that my personal opinion, the human final check will never go away, because models are useful, but they're never 100% accurate. In some cases, we'll just say, hey, this looks suspicious. We need some expert to take a look.
Yeah, makes sense. So is this automation, and also, again, looking at specifically data on natural catastrophes, climate risk, and extreme weather, is this mostly being used in the underwriting process or in the claims process? Like, are you ahead of it in underwriting, or are you sort of running after the facts in claims? What would your state of the art observation be currently?
From what I see, is more on the underwriting side, and also reinsurance and the CAT management. On claims side, we do have some use case. For example, after Ian, right, we use geospatial imagery and AI to help identify which of our policies were affected. The buildings, we can see the condition of the building, right? Using AI, we can say, okay, how many of those had level 1, level 2, level 3 damage? We can calculate IBNR, the incurred but not reported, quickly. But probably on the underwriting side, we have we can see a much wider usage. On the claims side, computer vision, geospatial imagery will be very, very useful. Just the climate piece is mainly on the CAT side. The normal claim, non-cat related claim, doesn't really leverage climate information much.
Gotcha. Yeah. So that's what I figured. I feel like Jakub could be able to talk more on like what it can do for claims, like automating a lot on that side. Whereas Nicole and Mario are more on the like, let's map out our risk and understand what our portfolio really means to us at this moment. So that's an interesting division there. Something I'd like to talk about is who will actually end up consuming this data directly, because there, as mentioned before, a lot of stakeholders. There's underwriters, there's claims agents, there are brokers, there are AIs, there are insurers, reinsurers, the lot of them that are all selling each other information, policies, more information, and some more risk. Who is best positioned to take in this load of data that's being produced by people here in this room and many, many more? Where do you sell, and where do you think it makes most impact within the value chain? And Nicole, can I ask you to try and take a stab at that? Like, in an ideal world, where does your data enter the equation?
Of course. So our data currently is mostly being used for portfolio management, with the idea of evolving into underwriting as well, as our models get approved by the regulators, and we make sure that the customers are very much trusting and like the technology. We will be moving into there, and I think that has a huge opportunity for obvious reasons. But for now, it's been a lot of portfolio management. So we basically we provide 3 different timelines for each of the perils that they want to look at, so that they understand the narrative of what's happening and how things are evolving over time, and that they can make like already tactical, but also like more kind of 3-year, 5-year kind of strategic plans as well. So yeah, it's been really interesting to see how customers and insurance are wanting to get ahead of the game, and not just like protect themselves and make more money, but like actually understand what's happening and really have an opinion, and I think that a lot of regulation is coming about that is also forcing that to happen. But I think it's at least I see the industry moving in the right direction.
Okay. Yeah. So that's quite a clear answer. And you also feel like the data that you're producing should end up there. Like the portfolio management is the best place to start utilizing it, or could we say, well, no, there's actually other actors that also need to get their hands on this?
No, I think portfolio management is the right way to start, because I think that you have to start to thinking of understanding what's happening before you take any like specific actions. So I think it's the right way to start. We work with both like with underwriters, with the data analytics teams, and we're speaking to the management also about what's happening. So it's moving in the right direction. I think there's a lot of opportunity both within insurance, not only property and casualty, but crop insurance and others, and also other industries. But I think this is it's the right way to start, specifically with our tech.
Okay, so then I have another question for Delin, if you wouldn't mind explaining this to me, because I know that various different insurance carriers go about defining their appetite for risk very differently. I feel some make it a very manual effort, and others, well, so to speak, release an AI and let it tell them what they should and shouldn't do. Do you have a specific opinion or strategy on this, or do you see a clear reason for such a difference in strategy? And to make it a bit more complex, considering all this new data that is coming in, is it wise to go one or the other way?
I'm very biased. By training, I'm a data scientist, so I believe everything should be data-driven. That said, there are tons of experience we inherited from the past. Underwriters, many of the underwriters have been in the line for 20, 30 years. They have experience that AI currently don't have yet. So at the moment, it's going to be...
We need more archive.
We need more archive, that's right. If we have hundreds of years of accurate data, the model will simply beat human performance. Just we don't have that yet. It's going to be a matter of time. Maybe in the next 5, 10, 20 years, AI will achieve that stage where the cumulative experience, when you look at the whole industry over many, many years, data points, AI can really perform better than human underwriting. That time, the whole industry will be different. But I think we have a long way to go before we can get there.
Do you think we are starting at square zero when it comes to taking like climate-related risks into account, because we just don't have as extensive of a history with that?
That part actually is a little different. So sorry, I was not talking about climate, I guess more in general about database-driven underwriting. Climate is a little because they are always changing. History is useful, but cannot fully predict the future. We've seen a lot of once 150 years cat events in recent time. Just the environment is changing. We talk about climate change, right? This is something we'll never have data on. So there are a lot of things we cannot fully rely on data itself to predict. We also have to rely on science and human logic. That's something we cannot achieve until we have the general AI, which probably will be much longer journey we have waited for. I don't know whether I will see it before I retire.
All right. Yeah, okay, that makes sense. So we are dealing with a different beast. We do need to have a strategy that's more, attuned to this new challenge coming our way. All right, it's good that realization exists, at least. Like, I would very much agree. But it's good to hear that like insurance companies themselves, even like not the front runner, but the fast follower, as you say yourself, would also see it that way, that something needs to change in order to really face this challenge. That again, like, is incredibly impactful. Like I've spent some like personal time thinking about this, and I was like, yeah, this is really quite something. We do need like the data and the help we can get to make sure that all of this stays manageable on the longer term. So another question that I wanted to run by you is, currently, out of all the state-of-the-art practices that you yourself are creating or that you have seen elsewhere in the market, which ones are frustratingly not getting any like feet in the sand? Do we have and do we have any idea as to why that is happening? Like, what are the barriers to entry there? Jakub, could I ask you first?
Sure. Let me take a stab on that. So, well, besides AI, right, and we already discussed AI, I think that the other practice, the other approach that is bringing super important quality increase to the table is multi-source data analysis, synthesis of data coming from different sources, and especially to what was mentioned by Delin, but also by my other colleagues here, is in times of climate instability, when predicting things based on the past data becomes much more difficult. We need to be creative, and this is why combining different types of geospatial data, like for example optical imagery and radar imagery, or it can be about combining data coming from satellites and maybe a little bit of drone imagery. It can be about feeding our machine learning models with some in situ measurements or ground truthing data that enable us to train better algorithms. So all in all, I'm talking about being able to, inside of one platform, one tool, connect properly geo-reference data coming from different sensors, different observations. Maybe we are talking about still optical, but actually sometimes it's Sentinel-2, and then a little bit of commercial imagery coming from one of the vendors, right? Those capabilities are crucial when we are thinking about increasing quality. And then why is it happening? Because this is difficult. So I already mentioned georeferencing, right? One of the problems. And then if we are talking about radar data, SAR, then combining SAR coming from different sensors brings its own problems that are probably well known to people on this call. But also it's about being able to reach different providers, right? Because if you need to sign contract with every provider separately, separately, then wow, out of a sudden your legal department, if you're a startup, you may need like 5 or 10 lawyers, and then analyzing this, analyzing SAR is different type of expertise than analyzing optical, right? So all in all, it's difficult, and this is why we, the industry, need better tools, better platforms that make combining data easier.
I do feel sort of this topic I care about greatly, just being one of the co-founders of Ellipsis Drive. But I won't comment. But Nicole, would you agree with Jakub that one of the things that haven't gotten full traction yet is relying on multi-source data to make better predictions, and that basically data management is one of the challenges that needs to be overcome?
I think maybe, and Delin can speak to this as well, but I think that with a lot of the solutions that are coming about, maybe insurers also get a bit like overwhelmed by the amount of solutions that they're out there, and it's hard to get through the noise, So I think I mean, like as an insurer, it's important for you to like decide what your priorities are, and make sure that like you're thinking about all of your data and your climate, forecasting, but also mitigation, and also the claims parts, and all of this kind of like together, and that everything is under one specific strategy, so that you're able to cut through the noise and just like prioritize and move forward. But yeah, I think that's what I have to say.
Yeah, that makes sense. Like, we do need insurance companies themselves to sort of step up as also the experts within what they feel they need to know. That will help you cut through the noise. And solutions are underway to make sure that the data that is out there is turning into better and better predictions. And indeed, like platforms to manage spatial data regardless of the sort and type, luckily also exists. And that's the logo of that company.
But if I may chime in here very quickly, on the one hand, we would like insurance companies to top up their game, but on the other hand, we cannot expect them to become masters of remote sensing, right? They have their own domain, which is super complex, and this is something where I have not much idea about. So this is why we, the industry, we need to provide them with better tools, just like you mentioned, Ellipsis Drive, Orbify, Nicole and Mario are also working on the tools that can be used by the industry to make better decisions. And this is what is super important, that they don't need to become experts, because like a couple of months ago, I attended an event, Phosphor-G, a geospatial event in Florence, and I was amazed to learn that Mars mission, Curiosity rover landing, was planned with tools that we all know. So QGIS, GDAL, SNAP, these tools were used to plan where Curiosity rovers would be placed. And on the one hand, this is like make me super proud. Yes, I'm using the same tools as NASA scientists, but on the other hand, really? Do we, for commercial purposes, are the best tools that we can use for commercial purposes are the same scientific tools that are used by NASA scientists to place rover on Mars? We need to get better at this. We need better commercial tools that are more user-friendly.
I think that's a fair comment to make. That's fair. So I want to try and wrap this up, because I personally have learned a lot already. There's lots more I'd like to dig into, but I think it would be good to have some closing thoughts between the four of you. And I'd like to ask you what changes you expect to see in the industry in this year and the next. So I don't want to hear like far off futures. I want to know what you'll be able to point at, say, at the end of 2024 and go like, this has changed for the better, whether you had a hand in it yourself or not. Like, what is going to change in the short term? Nicole, can I ask you to go first?
I think really for the next year, I think that insurers are going to start, or the industry is really going to dig deep into whatever perils are important to them, and really try to understand what is happening, and how what steps do they need to take to take the right mitigation steps, and really have like a strong perspective on what their path to the future is.
Right. So targeted action that will rely on like science and the human mind to make a choice and pick a direction in this.
Mm-hmm.
Yeah. All right. Mario, what would it be for you?
So again, I will take the view from as a European, a member of European Union. So in fact, what Nicole said is perfectly on spot. We need proper data to get proper action plans, and action plans can be exploited as for example, in risk insurance companies, but stakeholders themselves to create their own mitigation plans. Okay, but of course, it's a slightly new concept which goes hand in hand with everything non-financial in terms of environmental footprint. Typically, this is what climate change and climate risk are associated with. So I am hoping that the European Commission, for example, through the regulatory agencies of the member states, will in fact implement these new directives that will push forward this new concept within 2023 and 2024. Okay, so this really opens the path for Earth observation verticals to the different markets, not only blue economy where I operate, but also to the other sectors as well. And this is what I want to see at the end of 2024, because, by the way, it just might increase our client base.
Mm-hmm. And it also makes sense to want government entities to step on or step up rather in this area. Like it's certainly big enough, and it's certainly dangerous enough. But we'll make sure the European Commission gets a link to this webinar. Jakub, what do you think will change in the short term for the better?
Well, I'm sure that we will be able to offer better, more accessible, more analysis-ready data to the industries like insurance, but like agri-tech, like forestry, etc. Right? So this needs to change. That Sentinel-2, Landsat-8, and all the other constellations is amazing. But actually, what people care about is not satellites. Is like, is this pixel here a forest? Is this pixel here a building? Is this pixel here healthy crops? And I hope, in the next several months, will improve our game about providing that sort of answers, insights into specific pixels.
Got it. Yeah, and I think that sounds attainable. Yeah. So, Delin, could you top it off with what you expect is going to change this year and the next?
Yeah, well, actually, I have some very practical expectation. I hope, number one, I hope the image quality can be better, high resolution, more coverage. Right now, drone image has very high resolution, but very expensive, right? You can only get to a small area. And satellite has very good coverage, but resolution is not ideal. A lot of things you cannot really see. The second piece I hope we can see good improvement is geocoding. For a lot of research we do, we need to very accurately locate the building we insure. In some parts of the country, it's pretty good, but there are parts when you have an address, you just know it's like within 5 miles. That's the range that you get from geocoding. So that's the very practical improvement I hope to see. From the industry trend, actually, I see probably we'll get more combination of AI and human experts. At the moment, human in the loop is a very practical solution to the industry. Insurance companies have lots of experience and knowledge, and insurtech companies have very good tools. Combining the two probably will make a much better solution.
Yeah, and it sounds like certainly that last trend, that doesn't sound like a wish. It sounds like something that will happen. And then those first two, in the unit economics on high resolution imagery, it's been a pain point for years. It has gotten better, so let's hope that it will continue to do so. My question would be, though, when is that going to be? Next year? I'm personally afraid it's going to be a little longer. And geocoding is that's a hard one too. Also, plenty of companies that are diving on that one. So I do expect that to be going the right way. All right, so that's our time today. So we'll need to wrap it up. Thanks again for being here and for sharing your thoughts. We look forward to the next one. And that's a wrap. Thanks.
Thank you, Rose.